Beginner's Guide to Investing in 2026. Welcome back to Future Capital, where we decode money, jobs, and investing in the AI economy. You have learned which jobs are at risk, the skills to win, how to protect your income, and how to build a second income. Now, it is time to make your money work for you. A Beginner's Guide to Investing in 2026 in the AI era. By the end of this video, you will know where, how, and why to start investing. Even if you are starting from zero, the global economy is changing fast. AI could add $15.7 trillion to the global economy by 2030. Inflation and currency volatility are affecting savings. Without investing, your money loses value, opportunities are missed, and income growth is limited. With investing, your wealth grows. Over time, you benefit from AI-driven industries, and you build financial independence. Now, let's explore investment types for beginners. Number 1. Stocks. Individual companies. You can invest in AI infrastructure companies or cloud computing providers. These offer potential high growth with moderate risk. Start small and focus on industries benefiting from AI. Number 2. ETFs. Diversified portfolios. These allow you to spread risk, capture sector-wide growth, and make investing easier for beginners. Number 3. Crypto and digital assets. Examples include Bitcoin and Ethereum and AI-focused blockchain projects. But be careful, these assets are highly volatile. Only invest small amounts, and always do your research. Number 4. Real estate or REITs. Examples include data centers and AI-driven real estate systems. These can generate passive income and long-term appreciation. Number 5. Personal projects and side income investments. This includes AI-generated products, freelance AI services, and monetizing digital skills. Now, let's look at strategic investing for beginners. Number 1. Start early. Time and compound growth are your biggest advantage. Number 2. Diversify. Do not put all your money in one place. Number 3. Focus on growth and stability. AI industries, ETFs, and mixed assets. Number 4. Invest only what you can afford to lose, and always keep an emergency fund. Example, if you invest $200 per month into stocks and ETFs over 10 years, you can build over $36,000 with moderate growth. Investing in 2026 is not about luck, it is about strategy, consistency, and leveraging AI-driven growth. Start small, stay consistent, learn as you go. This is Future Capital, where we prepare you not just to survive, but to grow wealth in the AI economy. Subscribe and start building your financial future today.